understand where exactly is the dollar headed, whether yields are going to settle down. We've got Peter McGuire, CEO at AustraliaTrading.com, joining in on the show right now. Peter, hi, good to have you on the show. Let's talk about the dollar weakness first. And, the rupee also has remained very volatile for now, appreciated from its all-time peak of about 87.5. Do you think US dollar weakness is going to continue?
Well, good afternoon, or good morning, Aisha. Greetings from Sydney. Yes, I do think so. And I feel as though across a couple of different points. First, if you look at as far as yields are concerned, they're running at around about 4.47 now for the 10-year, 4.97 for the 30-year. Now, as far as the dollar's concerned, we've just seen a very solid downdraft over the last couple of weeks, certainly to test those 98s. It bounced again at 100, and it's currently running at around about 99.7, 99.8, that US dollar index. So I feel as though the downdraft will continue, and I think further softness, and I feel as though euro, yen, and pound will certainly benefit from that. They'll get stronger.
My friend, how you been?
Very well, thank you, Nikunj. How are you?
Well, life goes on, as they say.
Yes.
What's keeping you busy these days? Last time when we spoke to you, you were buying a lot of gold and you were selling a lot of oil. What is keeping you busy these days?
Yeah, I still think that that's going to continue. I feel as though that if I touch on the oil side of it, what happened and transpired over the last couple of weeks with MBS, Prince Mohammed bin Salman, and President Trump, I feel as though that downdraft of crude oil, we've got an OPEC meeting only around the corner, that will, I think the increase in production is going to push prices lower. There's the first part of that. So that's going to be a benefit, good for inflation. And then the other side, gold's given up some of that gain, but it's still running, incredibly hot, 33.25. It's still 100-to-1, the ratio, gold to silver. So I think that's, again, it's having a little bit of a break, a little bit of hot air's come out of it, but I still think it's going to be a higher price over 25 than what it is at the moment, Nikunj.
So consequently then, how much could dollar index fall to from the current levels of around 100?
Well, Aisha, I think, I want to test 98, maybe a 97.50. I want to see what's going on as far as Fed Chair Powell. If you're going to see a rate cut over this summer period, I don't think you're going to see a Fed rate cut this quarter. We've only got a month and a bit to go. So is it going to be a hot July, August as far as rate cuts? And are we going to see successive ones after that? So that's what I'm waiting to see. And if you're going to see rate cuts, I would think that would push dollar lower. So that's also, we've got to be very mindful what's happening as far as tariff policy, and where does Ursula and the EU, where do they navigate towards and get those, the conversation and negotiation locked down, over sometime in June for, Eurozone/US.
Peter, I think the BOJ, or the Bank of Japan, also has been playing a very crucial role, right? They've abandoned their yield curve control program, given the inflation in Japan. They plan to now adopt a very hawkish approach as well. Given that Japanese investors are the biggest holders of US treasuries, do you see them now hunting for better yields back home and the consequent hammering then of the greenback?
Well, they may. I mean, I've got to be also conscious of the other side of it, Aisha. Japan's 40-year bond sale, it's the weakest demand since last July. So that's just held off the press. So that's probably not a good sign, and I think they'll probably have to bid up higher as far as yield. So will there be a flight back to Japanese bonds? I wouldn't be surprised. And you've also got to take on board where the yen's traveling, because we've got a fairly strong yen back at 144, far stronger than that 160 handle. So that's the first sign of it. And you've got, I think, a return to try and get some growth into the Japanese economy. I mean, GDP's negative, and you've got CPI running at, I think, at about 3.6. So that's not a good sign overall.
Okay. So, Peter, why has China not lived up to what we thought was the year that belongs to the Chinese stock market and the Chinese currency? I mean, the consensus view somewhere at the beginning of the year was long China, and only long China.
Nikunj, I think that there's a couple of things. First off, I don't feel as though the property sector has been put to bed as far as that debt overhang So there's the first part. The second one is naturally what's going on as far as the manufacturing push to take manufacturing back to the US from President Trump and the tariff situation with China. There just seems to be, again, it's very much a work in progress. What is going to be the final number for the tariffs? Now, over the weekend, when that came out as far as President Trump and Ursula von der Leyen, then the second part of that whole argument was what's going on with Apple bringing manufacturing for a product that's not manufactured in the States. They're going to take a 25% tariff on that. I think this is going to cause much concern for the Chinese economy moving forward over 25.
All right, Peter, give us some sense that from here on, where do you see the dollar index headed, and what's the thing that you are actually looking forward to in terms of the US 10-year yield? Because firstly on the dollar index and secondly on the bond markets, these two numbers are being crucially tracked. So if you can help us with a number there.
Yeah, I think, I want to keep a 97.5 as a handle for the US dollar. If it goes under 97.5, I think you're going to see a 96. But it's back close on that 100 at the moment. So I want to see rate policy, what's going on from the States as far as Fed. I want to see numbers coming forward as far as inflation and what's going on with GDP. So and this will all happen by the end of June. I'm looking forward to the non-farm payrolls Friday week. There's the first part. So softer US dollar. Secondly, yield. 4.47, the 10-year is at the moment. It's given up a little bit of that hot air, but I still think that probably a push around that 4.6, 4.7 number is achievable unless something dramatic happens. And I think that it's going to be bid up for bond yield in the short term.
So, Peter, if you have to, let's say, punch in one long trade, one short trade for rest of the year, what would that trade be?
Gold long, crude short.
That you told me 6 months ago.
And it happened, didn't it? Have a look what happened. You and I'd be sitting here, we'd be very wealthy people if we traded. So gold is continual that updraft, and I think 3,700 is achievable sometime in Q3. And what's going on with oil market, I think softer from here. So because of increased production, I want to hear what the rhetoric is coming out from the OPEC meeting next week, and compliance is the big number. That's where everyone's focused, Nakunj, compliance.
All right, appreciate your time, Peter. Thank you very much for joining us. If you ignored Peter's advice last time, well, don't ignore it this time. He still feels that you should be long gold and short oil. Thank you, Peter. Hope to see you very soon in India.
Thank you, Nakunj.
Nitish Mittersain joins us now, Joint Manager